Hello again, everyone. It's another Federal Tax Updates podcast. It's Roger and Annie, and unfortunately, we're not together again. We're back in our separate offices after a great trip to Washington, D.C. to record our last podcast. So, Annie, how are you today?
I'm doing good. It was super fun hanging out with you in DC last week. I know our podcast aired, the one that we did there aired this past Monday. What's that, the 11th? But it was great seeing you. But now I'm back in Texas and I'm counting down the days when my kids are out of school. I'm not going to lie. The
Yeah.
month of May has flown by.
Yeah. No, it was great to be in D. It was a great event. I mean, just because we're probably going to refer to some of the things we heard there. But I mean, first of all, we heard from the IRS CEO, Frank
Hmm.
Bisignano, and some of his comments, in addition to the Assistant Secretary at Treasury for Tax Policy. Then we heard from a panel of journalists in the tax field, as well as a panel of Hill staffers and about what's going on in the tax community. So it was a fun event, and we got to do our podcast live. That's the only time we've done it with a
Yeah.
studio audience. So we encourage you to go back and listen. You'll hear what other folks in the industry, were saying during our podcast, because we really let them do a lot of the talking. But it was fun. It was great to see you, and we'll have to do it again sometime. But we're
Something
back in
different.
our home studios to the extent that they're a studio. So
You got it. You got it. Well, today, Roger, I think we're going to kind of focus more on tax issues. I know that may seem odd given tax season, busy season's technically over, but really there's still a lot of returns on extension, and we do have some updates on various topics that we feel our listeners that need to be aware. So we're going to start with some notable observations on busy season, and then we'll talk about some new stuff and because it's a podcast, we're going to mention ERC at least once or
yeah, at
twice.
least once. We even got it in last week.
Yeah, we did. We
Yeah.
did. So, let's go ahead and sort of get started. I know you and I talked, how did tax season go? We asked, our franchisees, what did you think? And I think there was some positive that came out of it,
Mhm.
but there was a lot of concerns, mainly due to the lack of funding. I mean, that's been significant challenges faced by the IRS, and it was like you got all this money, this infusion with the Inflation Reduction Act, and then it just like piece by piece it gets clawed back a little bit
Right.
and reassigned or earmarked for something else. So I don't know. I think we're still struggling there. They've lost over 25% of the workforce. There's new tax law, which was complicated, and we'll talk some about that. And then there's just sort of this lack of, I would say, commitment by taxpayers. They know the IRS is understaffed. They're kind of like, well, nobody's going to audit me. There's nobody working there. I'm just going to kind of nilly willy get my tax return done. And that's definitely not the momentum or
No,
what we need from
that's not the
that's not
feeling
going to
we want.
help.
No.
Yeah.
Yeah, I mean, I think it's, again, we're reflecting back on some of the things that we talked about last week, but, I think if all you did was electronically file a return and wait for a refund, it was probably a very good tax season. I mean,
If you
refunds
put your
went
direct deposit information in
right,
there.
if yeah, we'll get back to that, but yeah, assuming you gave them your checking account. It got a little more complicated when it came down to answering phone calls or doing
Yep.
other things. Now, one thing I will find interesting, I'm gonna again reflect back to what we heard from the, CEO. Um, he strongly believes that he wants to make the IRS more of a digital organization,
Hmm.
and he will challenge that a number of employees is the right number, that 75 is the wrong number, 100 is the right number. I think what he would tell you is it's a balance to find out what's the right number of employees and what's the right number of dollars to have to turn.
Hmm.
But he's convinced, and I'm not sure he's wrong, that we need to move to more of a digital agency than a human agency for things that some things humans have to do. But
Right. But
uh, so I think when all of us talk about loss of employees and loss of money, as I've said, and you've heard me say this probably to the point that you're sick of it, I'm not smart enough to know how many employees or how much money they need, but am smart enough to know if something's working or not. And if
mhm.
something's not working, then you guys figure out if that's because you need more people, need more money, or if you can get by, you're just not doing it right. So I know ERSAC came out again. Everybody focuses on employees and money. And yet I think he's focused on, and he's careful not to say modernization. He wants to talk about transformation. He believes he's transforming the agency into a more digital organization. But clearly that hasn't happened yet. And there was some challenges this filing season.
Yeah, and there was some improvements. I mean, I think there's been more access to the online accounts, both business and individuals. I do think that they've made some progress with the callback feature on the
Mhm.
phone lines that seem to be better than in previous years. But I mean, there's still ERC claims that haven't been processed. We've had so many concerns about, answering the phone, getting somebody who can actually assist. We've seen notices going out randomly. Like you said, there's progress, but still concerns, would be my
Yeah.
summary.
And I think you hit on something that is people related. Again, I don't know if 75,000 or 100,000 is the right number, but they did lose a lot of their institutional knowledge and experience in the layoff, and it's going to take a while for any new people to come anywhere near, the knowledge that they lost. So even if the 75,000 is the right number, it's a different level of history and experience and knowledge than we had before. And some of that was going to happen anyhow. There was a lot of people that were one of the reasons it made it so easy to go down is you had so many people eligible for retirement.
Right.
And this just kind of put them over the edge to go ahead and do it. So those folks were leaving at some point. I don't think anybody anticipated they'd leave all at once
All at
in that
once.
great
Yeah.
numbers. But I think a lot of it is that the people we're dealing with now are still, I'm not going to say in their infancy, but they're certainly, new and learning as opposed to people, like us. I mean, we look back to when we started in our career. I mean, we weren't near as smart or
Knowledgeable. Right, right.
knowledgeable as hopefully we've become over time. And so I think there's some growing pains we're gonna have to work through because filing season, if you just wanted a refund was fine, but to all the things you listed, there's
Yeah.
clearly things that need to be fixed.
Yeah, the CAF, the centralized authorization file, they had significant delays. I saw a stat that was generally it would only take, they shoot for 5 days. Historically, it's been 5 days to kind of process these authorizations. Now they're more of an average of 10 business days, and there's been reports like over 26 days.
Yeah.
All of it is they're trying to streamline it, but there's barriers that are, making it more difficult for tax practitioners to be able to get transcript availability or access to data. So it's like just one hiccup sort of after another, in my opinion.
Yeah, and that problem is not new, it's just getting worse.
It's just
And
getting worse, right?
it can sometimes when you need to get access to somebody's records or to a person, we know our clients don't always bring us notices,
Right.
the minute they get them, and we're facing a deadline, and we need to do something, and yet we can't get the CAF unit to process our authorization forms in time for us to meet the deadline. So it can create some real hard. Some of that clients should be better at getting us their
Sure.
forms, but
Yeah.
that's just not the real world. I mean, we're lucky if they open it and read it. I mean, there's still the
Right.
people who are afraid to open a letter from the IRS until we're there. Like,
Mhm.
something bad's going to happen that if we're there won't happen. But
Right.
so again, there's things like that really need some attention, and you hear a lot of groups saying that. And I don't know that anyone has said what we're gonna do differently to speed it up, but something's got to speed it up.
Well, there's gotta be some kind of, they've gotta speed it up, and then now that they've got the expanded online accounts, I mean, having that authorization to access is gonna be a game changer. We've
Right.
had the individual accounts for some time now, I don't know how long, but recently, the business tax accounts have also been made available, and that's crucial because it helps you can look at tax balances, make payments, see history, you can go get notices. You can download things out of there, transcripts. I mean, sometimes that's crucial to being able to, be able to prepare a return. If the records aren't there, You're going to have to be able to go somewhere to get it. And little things that just take time, like changing a business name or an address on file, or who's the responsible party. I mean, all of those things, if you can do it online in 5 minutes, much easier than sending in a form, waiting for it to be processed, or responding to notices with snail mail. I mean, it's very, very difficult to keep the ball rolling when there are fewer workers and it's taking longer times to solve the issues. It's difficult for the taxpayers. It's difficult for the tax practitioners, and I think the IRS thrives on being able to say, "We got out so many dollars in refunds in this many days," and that is great that they are doing that. But then it's the kind of one-off things, like you said. If you just filed a return and got a refund, probably none of this, affected you. But it's the dealing with the one-off, the mismatch notices, the "we didn't get your return." We hear it all the time. I get questions all the time. I have a client right now that mailed a check on 4/15, and it hasn't been cashed. Now, I know the IRS wants the money. I
Yeah.
know they're going to take the check,
That
but
could be
where
the
is
post
it? Like,
office. That could be the post
it
office's
could be
problem.
the yeah, the I mean,
Knowing that they're probably worse off than the IRS right now.
yeah, and so it's sort of like this, now should the client have sent the money in via, online account or whatnot, electronic payment? Of course. But here we are, and we've talked about this, Roger. Like, the modernization is great, but some of the older generations are really struggling, or people who like aren't banked, for example. They're really struggling with sort of, why can't the IRS just send me a check? Like, I
Yeah.
always just get a check. Why can't I just
Why
get a
can't I
check?
just get another one? Well, I think
Yeah,
one thing that's, we've got taxpayer accounts, we've got business
business.
accounts, we got tax pro accounts. I mean,
Yep.
clearly that's the direction everything's going. That
Mhm.
we're all going to have to, for those of us that are resisting or waiting till it gets better or perfect, you know, you might as well go ahead and get in now, because this is clearly the direction the IRS is
Mhm.
going. We'll talk a little bit about the problem with paper checks, and even the direction there directs you to your online account. But you're right. We've got people, and it's not so much the online account is hard to navigate. It's the ID me part of getting
Yes.
set up that it seems like people are having difficulty with. But for I think all of us need to work with our customers to say, we need an online account. That's just the way this is going. You can not like it. You can say it's too hard, but ultimately we're going to have a hard time functioning if we and our customers don't have online accounts, because that's, I believe, is clearly the direction the IRS is pushing us to, and they're going to win that battle.
Yeah, they are. And that's something that tax practitioners can assist, and charge for. Get the client in the office, get on a Zoom call if they can do that, and help them walk through the ID me. Talk to them about the benefits of it. I get it. My parents don't do online banking, and I've been doing online banking for years. My dad still, balances
Writes
his
checks.
checkbook. Yeah,
Yeah.
totally. And so I do get it, and nobody likes change, but I don't. I think if you're going to want to, you're going to have to do something, at least baby steps, like, you know, go to your tax practitioner and ask them to help you do this, explain to you how it works, kind of thing.
Yeah, I mean, it's just the way it is. But yeah, when you laugh and you talk about your father, I think that one of the worst experiences in his life is being in the checkout line at the grocery store to, to somebody who, right after they tell them, well, it's $112.97, and then they reach into their pocket or purse or whatever and pull out a checkbook and have to write it, and you're thinking, pick the wrong line again.
Yeah, yeah.
But I mean, we're all going to. I mean, most of us don't carry cash anymore. We don't carry
Yeah.
checkbooks anymore. I mean, we do everything through accounts of some sort online, and it's unfortunately in the practitioner community, we're going to kind of be the people that are going to have to help and nurse some people through that process of moving them up to the way the world works now, because it's not going back.
No. No, and I actually think the idea of phasing out paper checks was a great idea. I don't think I think it was like in September of 2025. It was like there was this executive order, and it was sort of like everybody's moving so quickly, and then tax season came along, and yes, the softwares were prompting you to enter this information in, but I think there should have been maybe a longer transition
Yeah.
period could have helped,
Right.
just to get the communication out, and the notices that are coming out. So if you don't put a direct deposit information on the tax return, it you can technically e-file it, although most professional softwares were, prompting you
They were at
to
least telling you left it
it
off and you need to put
right,
it in there.
right.
They wouldn't let you file it, but they were
But they would
telling
let
you.
you file it,
Right.
right, and so once it gets filed, it basically not that just gets held, and then a notice goes out, to the individual saying, and it was a little confusing, and it did look a little different. The notice, it's a CP53E, but it has a QR code on it. And so when the notices first went out, there was a lot of skepticism of whether or not this was legit. And a lot of people didn't want to, scan the QR code. They would rather go on their online account. And so th- while the IRS was still going to eventually process the return, the wait times for getting a paper check or requesting a paper check were like 6 weeks, and so it was confusion about, "Okay, well, what if I don't have an online account? Do I have to do an online account? What if I really don't have banking information? Do I scan the QR code?" And some people who were not getting a refund, so let's say you owed money, they were getting these notices too, and so that caused some confusion. Why am I getting this if I'm not getting a refund? I sent you my check, like, why am I getting a notice?
Mhm.
And so I don't I think it was maybe rushed a little, probably could have been handled more of a transition year, to
Yeah, I
avoid
agree.
like
I think that's
this what
because
happened.
I think we all probably underestimated the magnitude of the problem this would be in terms of people who don't have bank accounts or situations like you thought you owed money, so you didn't include it, and then you made a mistake, and it turned out you didn't claim an estimated tax payment that you had made, so you went to a refund. Now you're caught in all this.
Yeah,
And I think, had we been able to take an extra filing season maybe and kind of use this as a,
yeah,
the software companies could have probably gotten engaged and identified these unbanked people at the filing of the return and bypassing all these notices going back and forth.
yeah,
But still, uh, and I know there are alternatives, but the if I the letters, and this has become, we haven't been to any kind of IRS or practitioner meeting where this topic isn't discussed. And that's why
correct.
I think we underestimated the magnitude of the problem from the standpoint of how many people this impacts and telling people to go to their online account, enter their bank information. Well, I don't have an online account. You know, maybe we didn't do enough job pushing people to give us their bank account. If the people I don't have any sympathy for, people who have bank accounts and just said, I don't want to give it to them. Well,
Yeah, well,
you're in it by your own choice. But I
yeah.
think they'll figure this one out because paper checks. Now they'll never make you pay electronically because what are they going to tell you? I won't take your money if you mail me a check. I don't know how they.
I think there'll be a lot of encouragement to do
Right.
it, and some of it is not just, "Oh, we don't wanna cash your paper check." I mean, a lot of it has to do with identity theft and
There's scams
scams.
already. Yeah.
And all that kind of stuff. But this was just like it caused confusion, but it also a waste of time for the IRS employees having to deal with this. Frustration on the taxpayer side, and delay in their refund. And then there's a lot of clients like that. There's also a practitioner impact. The clients are confused and they're like, "Why do I have this? What did you do wrong?"
Yeah.
So it's sort of like they're losing, not faith, but they're kind of questioning the practitioner, like, well, oh, I don't understand. Why do I have to do this? Why am I getting this notice? So, uh, all in all, probably not the smoothest rollout.
No.
Um,
But I mean, I'm assuming the executive order told them they had to do it for this filing season, but it would have been much better had they said
yeah,
by next filing season, we need a comprehensive plan to eliminate the paper checks. Because honestly, I feel sorry for some people who count on this money and they need it
yeah,
and they weren't told or didn't understand that they won't get it as quick as they used to get it. And now they're scrambling around because they still got to pay their
And
rent,
see,
or they
right.
got to do whatever they got to do, and now they're going to have to wait an extended period of time to actually get their money. And I hope it'll get better. I know that service and some of the and again, let's remember, they didn't come up with this idea. They didn't
Right.
ask for this. They were told to do it, and they had a short period of time to do it. I hope and think it'll get better, because I think the software companies can be a real help here if they give them
Mhm.
time to go ahead and tell somebody, I don't have a bank account, so just move on. You don't need to send
Yeah.
me something and ask me to put a bank account information in. I don't have one. So just
Yeah.
put me in the queue for a paper check, and at least eliminate the back and forth and hopefully shorten the wait time. But it's
Yeah.
not going away.
No. No, so that definitely was frustration, for this filing season. And we also, at least on our end, and we've heard too, there was a lot of more e-file rejections. There was a big push again to prevent fraud,
Right.
to identity theft, avoid the scams. So there were a lot of, it was weird, it was like these name mismatch, or these schema errors, and it was enhanced measurements that had good purpose
There was a
for them.
basis for what they were doing. Yeah.
Yes, but let's say you filed, I don't know, I'll use an example of partnership return. So you've been filing this partnership return for the last 5 years, never had an issue with, oh, the name or the EIN doesn't match, da 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 da. And there were a lot of, they got really picky. Was there a comma LLC? Were there periods between LLC? Was there an ink with a period, without a period? So it got really granular. But they were, sending e-file rejections as a result. And then you had to call a 1-800 number to verify, this is correct, da 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 da. And so it's time consuming, annoying, probably on the IRS side, saved, I don't know, however many dollars, in fraud, because things were getting matched. But again, I think that was something that we didn't anticipate, and some of it was part of the Trump accounts. Like
Mhm.
they were very specific on, it had to match the child's social security card exactly. So that was, all of it, again, good purpose, but just tedious, annoying little things that we didn't anticipate for tax season.
Yeah, Trump accounts are interesting, and we'll probably have to do a show on it. But that seems such a simple idea, that
I
let's just
know.
give everybody an account. The government will put $1,000 in it, and we'll move forward. I mean, who would have ever thought there's potential gift tax implications to
On the
all this?
interest earned, right.
Yeah, no, I mean, it's like, gosh, I mean, just things just can't be simple.
Mhm,
and
mhm.
and then there's the matching and the fraud and all the different things. And you got private sector people matching, and states doing things differently.
The
Yeah.
states are sort of piggybacking on that, and so it will be interesting to see kind of what evolves, because I 2025 was like, I don't know if they called it a test or a pilot, so to say, of the program. And so I guess we'll hear whether or not it was tech. I know there were millions of children who were signed up. I guess we'll have to wait for some feedback on, how these are going. Will it be expanded to additional ages or matches, or what the states can do or can't do? So that will be interesting to see.
Yeah. There's one other interesting thing, because, I mean, you don't think it's late when the OBB got passed, but it is late for a lot of states.
Mhm,
And we're still going to go through, I'm noticing some states just now for next year conforming or partially conforming to the no tax on tips, or whatever you call it.
mhm.
So, your state return this year may not have even had a deduction for any of those OBB provisions. Now,
And it
next
just
year you'll
depends
get,
on the state.
depends on the state. Next year you may get some of them, because the legislatures weren't in session until after. So we've still got a whole nother year of figuring out where the states are going to fall on all this, and how much of all these deductions are
By
going
the
to
time
work.
it expires in
Then it'll
2028,
be
we'll
then
have
it'll
just
go
figured
away.
it
We'll have
out.
figured it out, and it'll all be gone. Yeah, I just was reading in Georgia, they're coming up with adopting some of the deductions for tips and something to deduct overtime, but it's not exactly like the federal. And there was nothing last year, but this will start next year, and same thing. I mean, so it's just,
Yeah.
it's a mess. And I read one really interesting article this morning. I haven't even told you about this. We didn't talk. It was a panel of people, half of them favoring OBB and half of them not. And it was really interesting to hear how the people opposed to everything in the big, beautiful bill were harping on the fact that saying no tax on tips, no tax on overtime, no tax on Social Security is just a lie. and they're technically
It's a play
correct.
on words. It's a
Yeah,
play on
yes,
words.
it's an election term, not a tax term, because there is
Yeah.
tax. There's at least Social Security and Medicare.
Yeah.
And so I don't know. Who knows where this will go? We've
Well,
got
and then
elections.
coming up, I mean, we're getting the new W-2, the new 1099, the new W-4. I mean, there's still new, say, parts of this that have to be implemented, and things are going to be treated differently going forward for because of the retroactiveness of the bill. So I mean, it's not over.
Yeah.
We'll
And it's
have
all scheduled to, not all of it, a lot of it is scheduled to expire right
mm,
when we'll have the new presidential election. And if you have a change in parties controlling Washington, they can let all this stuff go away. So by the time we got all the forms and got everything figured out, then it just goes away, and who
uh,
knows what replaces it. So
you're right.
that's life in the tax world. This is
Yeah,
not the first time this has happened, and it won't be the last.
I agree. All right. Well, how about some new news? Let's say, while most of our tax practitioners were heads down preparing tax returns, there were some things that happened that will affect in the short term and some in the long term. So, Roger, why don't you tell us about the Kwong case? We have spoken about this on
Right.
at least one, maybe two previous podcasts, but I feel like you get a little twist and a little something every now and then. So, bring us up to speed, if you would, on the Kwong case and what it means for us.
Yeah, and the reason that we keep harping on it is because this case was, ruled on at the end of last year, and there's a July 10th of this year deadline. So if this is the first podcast you've listened to, I want to bring you up. But basically what the Kwong case did, and then I'll get into some of the finer points that you need to consider and kind of our advice as to how you need to deal with your clients about something that's kind of up in the air or unknown. The Kwong case basically was a case saying that when there's a disaster, deadlines are extended till the disaster is over. So if we go back to COVID, there were some extended deadlines during COVID, but basically there were still deadlines. But this court case said that, wait a minute, we were in a federally declared disaster, and
Mm.
until President Biden declared it over, none of these other deadlines really mattered. That the real deadline became July the 10th of 2023. So what does that mean? Well,
Mhm.
what that means is that if there were penalties associated with action about a deadline during this January of 2020, am I
Mhm.
right? January of
January
2020
20th of
of 2020
2020
through
through
July the
May.
10th. Well, through May, and then it was automatically the statute extends it, what,
Yeah,
60 days
60
or
days.
something.
Yep,
Yeah.
yep.
So if you were charged a penalty, and I'm going to go over a list of some of the things that are obvious and aren't obvious, based on being late, based on a deadline that wasn't July the 10th, then the court ruled that you were entitled to a refund. And because your real deadline was July the 10th, not
Of the
whatever
penalties and interest, a
the
refund of the
penalties in it, not
penalties and
yet.
interest.
Yeah, the penalties and interest. It wasn't specific to income taxes.
No.
It covered income taxes. It covered business taxes.
Mhm.
It covered failure to pay the right amount of estimated tax penalties because the deadline wasn't whatever the deadline was.
Right.
It was by the July the 10th,
So you actually had more time to make estimated tax payments during that time
as it
frame.
turned out. Right. It even covered certain things like failure to file W-2s on time or 1099. So, I mean, it covered payroll tax deposits that were
Payroll
late.
tax,
I mean,
ERC.
yeah, okay, we can't get by it. We'll get to ERCs and everything, and there's some new news on that Annie will cover. But so anyhow, it covers all of these things that were subject to penalties, and yet because of the 3-year statute, if we don't do something by July the 10th of this year, 2026,
Yeah,
you
months.
lose that. You lose it. You're out.
And I'm sure, and I mean, I've seen so much in the news very recently, but nothing from the IRS. It's like they're just pretending, we're
Yeah.
not gonna say anything about it. I mean, they obviously could challenge it.
Well, they
Um,
threatened to appeal it. We haven't seen it yet, but
right,
they
I
said they
haven't
would
seen it.
appeal it.
But, they're not providing any guidance to help, let's say, help the taxpayers do this, get this money. And they're I don't in my opinion, I think they're just sort of letting the clock run, hoping that, whoever doesn't file by July 10th is done.
Yeah.
But go ahead, because that's not
And
the
and that
case.
yeah, well,
There's
and
a
the
safe
taxpayer
harbor.
advocate, to your point, put out some guidance. Number one, I encourage you to go look at it. It's one of their blogs on the Kwong case from the taxpayer advocate's office. But I think the main purpose of her blog was to be critical of the IRS for not putting out guidance and not doing something automatically, but leaving it up to, and this is kind of where I think we can separate ourselves as good tax professionals. But basically, her conclusion was if you weren't working with a good, strong tax professional, you were never going to know about this. And
Mhm.
you were going to miss getting this money back or penalties abated, whatever the case may be. And it shouldn't be that court cases are decided based on the quality of the tax professional you work with. And so that was really kind of her message, but she also did a really good job of getting into the details of, because there's two choices on this, and then we'll talk about the business side. One is if you know for a fact that you're due $5,000 on a penalty for a late filing payment and the amount's clear, everything's clear, you can file an 843, but you have to file it on paper. You have to file it by July the 10th. You have to
A wet signature.
wet signature. You have to reference the Kwong case, and you file an application for a refund.
Mhm.
But if you can't calculate the exact amount, or your situation's maybe a little iffy, or you're concerned that the courts will flip it, she recommends, and everybody recommends, that you file a protective claim on the 843, which it gives you, you don't have to have as much detailed information. So the message is, if you have people that this covers, by July the 10th, you either file the refund on the 843 or you file the protective claim on the 843. Now, there's some advantages in this. We're not going to spend a lot of time getting into the great details, but a protective claim, I mean, it's better than doing nothing for sure.
Nothing,
It's
right?
not as good as filing a real claim if you know that you're entitled to it. But here's the problem, Nanny, you've expressed it a couple of times that we're hearing from our people, and I'm sure you're doing the same thing. Let's say the client's going to get $1,000 back, but you're going to charge them $500 to do it. Or you're going to charge them $500 to put a protective claim up, and they may never see a dime.
Right.
How do we deal with our clients in that situation? What do we
Well,
do?
it's really the client's decision.
Right.
I mean, accessing so online accounts are going to be the best place to go to determine, where the notice is and look at the notice to see how much was penalty and interest versus tax because you have to break all that out when you
Right.
file the form 843. And so, if the client can log in and they can get this and it's a big dollar, it's probably worth the I'm just using $500 tax, prep fee. And take the chance that you might get 15,000 back or something.
Mhm.
But there is going to have to be some discussion with the client in the sense that this is what is current right now and we have a deadline of July 10th. And we can do this. I can't promise you that you're going to get it because the IRS is not providing guidance, but
And they may
do
appeal and win.
right. But it's going to be up to the client. Do you want to go for it or do you want to take a pass? And I will say, for tax practitioners out there, I strongly recommend, and we're doing this with our offices, some form of communication that this exists, that there's an opportunity out there. You don't need an angry client coming to you on July 11th, let's say, and saying, "Well, I paid all this stuff, and my friend got this, and I heard about this, and you never told me about this, and now it's too late," and blah 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 blah. I think for us, we sent out a basic communication outlining very briefly if you had penalties and interest, or you had these things during this time frame. call me, call us, let us talk to you about it and see if it's worth doing. And I think that's worthy of, a tax practitioner to do for their client.
I think that's the minimum we need to do because
Yeah.
I, I'm not going to make the decision. I mean, look, if it were me and someone said I'm going to charge you 500 to get back 600, I'd say, well, just forget it. But I made that decision as the client. What we
Right.
don't need to do is make our own decision for the client and assume I'm not going to tell you because you're not going to want to do it. Because I can promise you, if they find out after the fact, like you said, July the 11th, they're going to tell you they would have paid whatever you wanted to get that $600 back. And you have no argument at that point. So I think the summary of what I would say, first of all, I would refer you to the taxpayer advocate.
Mhm.
We did a podcast, I can't remember how far back, with two people from the Frost law firm. And the
Oh,
Frost
yeah.
law firm is really big in doing this. They have some good information out. They put a blog out yesterday from a friend of ours, Terry Lemons, if you guys may know from the IRS, is working for Frost, put out a great article yesterday on this. Familiarize yourself enough to at least go to the clients and explain to them what is happening, what the court ruling was, the shortness of time that we have to make a decision, um, and either tell them your firm is not offering that service, but we feel it's obligated to tell you about it, or we're doing it and here's our fee structure. Would you like us to do it? I think as long as you do those things, the client will make their own decision. They'll
Mhm.
decide what they want to do, and is it economics? Are they willing to take the gamble if they're waiting on rulings or whatever the case may be?
Yeah. Yeah.
But I think where we really make a mistake is if we don't take this seriously and make an effort to identify the clients. And remember, it covers a lot of different taxes. So
Yeah. It's gonna be
it's not
hard to
it's
determine.
not easy to do. That's why the fees can't be so low because it's a lot of work. Unless they got a notice and you can respond directly to a
Right.
notice, digging up what penalty was it and was it charged for this and all these sorts of things. There's some work to be done. And again, you may say, I'm not going to do this, Mr. or Miss Client, but I think you need to know. And if you want to pursue it, go somewhere else to pursue it. I'm
Yeah.
not going to do it. I don't know.
Yeah.
I'm not saying that's a good business practice, but that's your right. But you must inform your clients about this case. And
And remember, you can't charge a contingency fee.
no,
So, if you're thinking in your head, "Oh, well, I could do this, and then if they get the money or if it's not appealed or da 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 da, I'll take a portion of it." That's not allowed. You
right.
need to collect payments upfront, for a reasonable charge based on your knowledge, the value of your service, etc., and then what happens in the processing. Now, I don't know. Have we heard, Roger, are the 8843s getting processed? Are people getting their money?
Well, one of the problems is we don't know because there's first we have to file on paper, which is going to slow it
Take
down
forever, right?
forever. There's no tracking of it. One of the suggestions that people make is make sure you send it in certified mail or
Oh,
somehow so
yeah,
you
for
can even
sure.
acknowledge that they receive it. So no, I mean, we've heard anecdotally that
Yeah,
in cases where there's people discussing it, we're in an audit or in a settlement, that when they've
yeah,
put it up in that situation, the IRS has acquiesced to the Kwong case. But as far as just processing 843s, I don't know that anybody has gotten
yeah,
payment yet. Because first of all, even if they sent the stupid thing in the day the Kwong case was announced, I'm not sure it would have been processed on paper yet. So
yeah.
there's again, I appreciate the fact there's a lot of uncertainty in this.
Mhm.
But the only thing, we can sit here and debate. Andy and I could debate all day whether to file a claim or a protective claim.
I think if you have the numbers and you feel confident that the Form 843 is filled out properly with the proper support or calculation, I say send it in.
Yeah.
If you think that the money is worth it and you just haven't gathered the data or, the client's getting more information to you, then I don't see any harm in a protective claim.
But you're still
Um,
going to do a lot of work to even do the
of
protective
course.
claim because you got to
Yeah,
determine.
you got it.
But we can debate that. What we can't debate, and what the one mistake that will not happen unless the IRS does something nobody expects, is you can't miss the July 10th deadline.
Right.
It won't matter if you're still arguing about a claim or a protective claim on July the 11th, then you might as well stop arguing because it's over. So you can go in either direction that you feel comfortable with claims or protective claims. but you got to do it by July 10th. And you got to start by coming up with some sort of communication to your clients to make them aware of this, because I can see instances where potentially somebody that could have gotten a lot of money didn't get it because you didn't tell them, because this is not being talked about in the, I mean, you're not going to know about this unless you're in
Yeah.
our field. And I think if we do our job, we will also remember what I said, the taxpayer advocate's point is that unless you have a really professional tax preparer, you're not going to know about it. Well, I'd rather be in the group that have a profession. I'd be in the group of professionals than non-professionals.
Yeah.
And that
Set
means
set
that,
apart. So set
yeah.
yourself apart, set yourself up for, happy clients, new clients based on this.
And they'll decide whether they want to do it or not. They'll, if they want to pay your fee and do it, let's do it. But just tell them. Just tell them. So we're going to keep pounding Kwong probably for every podcast we do between
Till
now and
July.
till July the 10th. So
Yeah.
we'll apologize in advance, but it's just something I think we've got an obligation to at least address, and hopefully, get some clients either some money back or some penalties abated. Remember, it can abate penalties as well as get refunds. So
Yep.
if there's penalties that you're disputing because of this, you're asking for an abatement, not a refund. But again, we're not going to get too technical.
Yeah.
Well, we had to mention ERC, Amy. So I mean,
Well, I mean,
there's new stuff on that too.
There is, and it's another opportunity for your clients. So if basically what's happened is the IRS has introduced like this option for taxpayers who need more time to review a previously disallowed ERC claim. So I think the IRS is probably trying to avoid, lengthy, expensive litigation associated with this. But what there's typically, you get 2 years. So you receive the 105C or the 106C letter. That's the ones dealing with the ERC, and you have 2 years to sort of respond, agree, disagree, challenge, whatever. So now the IRS is saying, "Hey, we realize time's flying by. So if you are someone who has 6 months or left remaining in that 2-year time frame, we'll give you some extra time. You have to ask for it. You have
Right.
to file a form 907, send it to the agency. You can you can upload it through an online tool, or you can send it snail mail. But it's basically requesting from the IRS, hey, you have this provision where I can get new time. I would like more time. And so, if you have clients with the ERC that maybe got disallowed, or they're still trying to figure out if the changes were correct, or can you support them, or blah 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 blah. So you could potentially get additional. Your client could get potentially additional time to deal with ERC. So I mean, I'm still hearing claims being processed, and some people still waiting on their money. And I don't know what pile and what room at the IRS all of these are sitting at, but it's somebody's got a big stack of paper.
Yeah, and I think everybody at the IRS and Annie and I and everybody, our listeners, will be ready when we don't have to talk about ERC anymore, but it'll go away. And another thing, and it's something we heard last week at the fly-in, or we heard and something was announced. If any of your clients invested in conservation easements,
Another one.
first of all, they're not doing real well in court. As Ken Keyes mentioned, it's not just, a lot of people said, well, I'll just try it. What the hell? If I lose, I'll have to pay the tax back.
Yeah, back.
Well, the penalties that are being assessed on conservation easements are 40%, and courts are upholding that. So think about it. If you saved $100,000 in taxes, you're going to owe the $100,000 interest and 40%. So it's but what the IRS has said, and I haven't seen it, I've heard it announced, I haven't seen it yet, but they're talking about coming up with some sort of, because there's a lot of those out there. So
Well, I mean, it was promoted. It was
Oh,
this
yeah.
huge, and it was working, right? People got their money, and then it was sort of like, wait a minute, it's almost like an ERC mill for
Right.
easements. But it
Yeah.
it was highly promoted and well accepted by the
Oh, I
public.
mean,
A
who
lot
wouldn't?
of people did it. Yes.
Yeah, I mean, it's like, well, I'm going to invest $10,000, then I'm going to get $100,000 write-off on a $10,000. I mean, that's and
Right.
it came with really great looking background
Mhm.
information, lawyers signing off, CPAs signing off, and all
Yeah.
those sorts of
Yeah.
things. And in some cases, it was just done improperly. There wasn't the perpetual transfer of ownership, and in some cases, it was just made up. That this piece of dirt today that I paid ten
Right.
thousand dollars for, miraculously a year from now will be worth 10 million if I put a golf course on it. And so I'm going to deduct the difference as a deduction. I mean, it,
It
it's
was
like
slight.
anything. The
Yeah.
concept was legal. It's taking advantage of it and going too far. But the IRS has said, because there's so many cases, they're just overwhelmed with cases. They're going to offer some sort of safe harbor settlement. I haven't seen what it is yet. Kind of like, remember when they did this with ERC, if you pay it back or do this sort of stuff. So we're
Yeah.
anticipating there be something coming out. Again, I've heard the announcement they're doing it. I don't know if you've seen it. I haven't seen
I
what it
haven't
is yet.
seen it, but I'm guessing it's gonna be something like, turn yourself in, pay back whatever, and we won't charge,
We'll only
the
charge you
40%.
10% instead of
Right.
40% or something.
And you have a time frame of doing it, and here's the special place you go or the special form
Form
that
you
you
file or
use
whatever.
to do
So
it.
if you have clients that invested in conservation easements and they're nervous, as they should be,
Mhm.
keep an eye out for whatever this is. Again, I don't know what it is, but it might be the best you're going to do because uh, Ken Keyes made it very clear when we go to court, we're winning.
Mhm.
And these penalties are being upheld as well. So, no, that's
And
not to
I
say.
didn't hear I don't is there a certain time frame? Meaning,
Uh,
like how far back like the transaction occurred?
Well, I think they're probably trying to institute fraud to eliminate a
Yeah.
lot of that, and
Yeah.
because, I mean, some of them are just
It's true.
outrageous. I mean,
Yeah.
they're ridiculously, out of whack. And again, it's just, I don't know, what's the saying, pigs
Too
get, so
good
I don't know, whatever it is,
too good to be true.
yeah, it is. And it is. But again, the concept that no one created this. This is different than what are the Indian tribal credits, and nobody can
Which
really
never
figure out,
existed,
never
right?
existed. This was a legitimate activity.
Yeah.
But people just went crazy with it, and again, they came up with these appraisals of what this would do for, if I just did this, and I don't
Yeah.
have to do it. I just gotta show you what would happen if I did do it, and because I'm not doing it, you owe me money.
Yeah.
It's
Yeah.
I mean, it's a little crazy. I understood why that happened because but keep an eye out for that. They have said there's gonna be
Oh,
some sort of safe harbor, and, if you have clients, it's gotta be better than paying everything back plus 40%.
yep. And we'll continue to follow it
Right.
and, bring you the latest on another podcast. So,
But there may
um,
be hope.
yeah, or at least, I mean, it kind of sounds like you're gonna have to come out of pocket regardless, but at least you might not have the large penalties. So,
Yeah.
we'll
It's kinda
we'll
like
do that.
going from the death penalty to life in prison. It ain't great, but it's still better.
That's one way to look at it.
Yeah.
What
What
else do
else?
we have? So we just have a few minutes here. There's sort of call to action items that I just want to remind you of. I know it's May. I know we're telling you about a July deadline. I know you've got returns on extension. There's still lots to do, but I do encourage you to remember these few things that give you a touch point with your clients and may help you down the road. So, for example, encouraging those who either got really large refunds or had large balance due to look at their withholdings, maybe update their W 4 with their employer to sort of even keel that out. Notices, another thing is notices are going out, not just the ones for the direct deposit information, but just our regular notices. And I don't know how many different types. There's a huge list on the IRS website. Kind of, you can click on it and it'll tell you, what does this notice mean? What are you supposed to do? Kind of layman's terms to deal with that. Obviously encourage your clients not to just toss those if they come in the mail. But again, online accounts would help with the ease of access, ability to not only view the notices but most of the time you can respond or even upload documents or support or whatever. So that's something good. And then it was just our April podcast. We spent a lot of time talking about post tax season evaluation. Spend some time evaluating how your firm did during busy season. What clients maybe you need to fire, what clients need better training, what clients need to pay you more, your pricing, your staff, do you have the right people in the right spot? Do you have the right technology, your processes, your workflow? And so hopefully everybody did take a minute to do that, to sort of evaluate the success, pain points, bottlenecks. But now is the time to take action. So if you just keep pushing it down the road, one, it's not going to be, as prominent in your thought process, but you'll end up next tax season with the same issues. So I highly recommend, during these summer months that, if you want to really improve your quality of life during tax season, or grow your practice, or streamline your processes, this is the time to actually take action. So I know it's easier said than done, but we encourage our firms to do it. And let me tell you, the ones who actually take action and do something are very happy they did.
Makes a big difference.
It is. And then the IRS forum dates are out. If you have never attended an IRS forum, there are 5 various cities. It's like June through August ish. The dates are out there. Locations are out there. I saw yesterday that they put out some course descriptions with the agendas. I strongly encourage, if you can attend, and you've never attended before, it's worth it. The I don't remember the registration fee, but it's fairly
It's
reasonable, and you
very,
get
very affordable. Yeah.
very affordable, and you get various hours of CE, and then there's a whole vendor area with sponsors and vendors out there to talk to you about technology or resources or hiring and all these things. So check that out. I know we'll be there. The
Yep.
pageant will have a booth at 4 of them. Roger's speaking at all of them. He's going to be traveling all over this summer.
Yeah.
I told him he just needs to keep a bag packed. No,
Yeah.
no
Yeah.
need to unpack.
Yeah. Just get
So
off the plane and get the next suit bag and go back.
yeah, exactly.
We're
But it
also
is
going to be
something worth checking. Go ahead.
we're also going to be presenting typically these things start on Monday, but registration is on Sunday. And on Monday, something new this year that the IRS is doing is they're putting in some practice management courses, and we're going to
Hmm.
be teaching one of them. Those will start every Sunday at 4 p.m. So if you get there early, there's going to be 3 or 4 sessions around in addition to ours. But we'd love to see you, and
Yeah.
we'll be in all of the exhibit halls except New York. So come by and say hello.
Yeah. Well, that's all I have for today. I hope everybody enjoyed it. Some of it was a little bit of a repeat, but a lot of it, I do think, is directly related to a lot of our listeners. So I'm glad we had the opportunity to bring that to you. And yeah, we'll be back. We've got various podcasts set up. We've got some guest speakers. We've got some new information to bring. So continue to listen and invite your friends.
Yeah, we've got some great, we're not going to tell you who our guests are until we're actually doing it, because what we've learned is
Things could
that
happen.
sometimes things get in the way, and they come later, but they'll be here. We've got some great guests, some great topics, and I hope you've enjoyed. Those of you who've been listening, I think I've been amazed. Even we were at NAE last week, finding out how many people actually listen to us,
Yeah, I
and
know.
we appreciate every listener we have, and we want to have more. And come see us at different events. We're going to be around the country. We hope you'll come see us, and most importantly, we hope you'll continue to listen to this podcast and
Yeah.
let us know what you think. Give us suggestions, whatever.
Yeah, we take suggestions for topics. If there's something that you're struggling with and you think we would be, knowledgeable to bring it to you. If we can, we will.
Yeah, we take requests. We don't sing, but we take requests. So,
There you go.
all right. Well, Annie, as always, it was great to see you last week, and
Definitely.
great to have you back on the podcast today. And thanks to all our listeners. And we hope that you enjoyed this, and we hope you'll tell your friends about it. And most importantly, we hope you'll join us next time. for another Federal Tax Update podcast. Bye, everyone.